So, Jarek Bialek, CEO of Revenue Capital, welcome to Unite Monaco.
Thank you for having me.
Tell us more about Revenue Capital before we dive into the questions.
Sure. So, Revenue Capital provides tokenized money or tokenized funding. What does it mean? We fund projects, both types, so on-chain, off-chain, being just at the verge of entering the market or right after entering the market. We like calling our funds scale-up funds, as scale-up funds, or simply growth money. So that's basically the purpose for which we provide funding, and that's also the time in the pipeline or in the life cycle where this money should be better applied. The twist here is that we don't take equity, so it's not a classic equity-taking fund. We derive revenues for our investors from the revenues generated by our portfolio companies. So that's the first twist. The second one is that we are actually backed by quite a large community of our own investors. So like a classic VC fund, we have a crowd of approximately 8,000 investors behind us, meaning that every single project which is considered to be invested is disclosed to this community. And the community, even if it's not the DAO, so there's no sort of automatic decision making here. But the community can either support our decision or simply not support. We're obviously would like to follow those projects which are supported by the community. So once the community supports a project, it can be like kind of acquired by those companies, being used as their own one. So now imagine you have a product, you're entering the market, you don't have your own community yet, or it's very small, very fragile. So this way, apart from taking cash, taking the money, you can also acquire the community which is going to back you, being your own your first customers or something like playing any role in your own marketing strategy. So that's this kind of a unique USP we put on the table when talking to prospective portfolio companies.
How about the regulations, and what would the new legislation mean for investors?
Okay, so that's actually a super broad question, and I wouldn't claim. I mean, to be frank, obviously nobody knows what these new regulations are going to be, but we can imagine, obviously, but we can only speculate in terms of timing and the scope. What is certain, and I think everyone is going to agree, that it's not the question about if, but rather when. And the path is probably already set, followed by what happened with some exotic financial instruments, which we saw over the past couple of decades to be introduced on the market. So from the investor perspective, well, first of all, just to embrace, let's say, the situation, it obviously means more certainty in the sense that if you invest in a tokenized venture, so there's a token which represents a certain value. Now, jurisdiction to jurisdiction, we might not necessarily agree how this value should be defined. So what this token exactly should represent, what should it do? And I kind of understand regulation as kind of bringing everything to the same kind of parameter, let's say, so that we all understand what utility token is, what payment token is, what security token is, and eventually what each of the hybrid ones might represent. So from the investor perspective, simply it means more clarity on an ongoing basis. Just to be fair, to kind of present a little bit of a darker side, of what over-regulating the market might mean. Well, it might simply limit the supply of projects, and that's obviously quite a risk, if you look at this from the investor perspective. So now, I mean, the only hope is that, of course, we're going to look for some kind of middle ground here, which kind of is happening. If you look at Switzerland, for instance, how Switzerland resolved that in a very straightforward and practical way. I just hope that we're going to see the same certain scope of regulations, being unfolded in other jurisdictions as well.
But how is blockchain and cryptocurrency disrupt the traditional venture capital?
Okay, so a quick answer to that would be more liquidity.
Mm-hmm.
If you look at the traditional way how investments has been done so far, so by traditional I mean the equity taking ventures, you simply have to, approach to risk is kind of comparable, but then you simply have to wait until there's an exit period, and then you can participate like in the success as an investor only when this kind of time period is over. So after 3 to 5 years, basically, when there's an exit from the invested company. Now, what technology brings in form of blockchain, in form of crypto, we're talking about tokenization, asset tokenization. So, whatever this projects represent, so if there are the underlying assets, if there's a service which potentially can be tokenized. Like tokenized, I mean, we talk about like a new asset class, which represents, again, I talked about value before, which is defined if those underlying assets are regulated and well defined. So assuming that yes, they are or they will be essentially defined in all jurisdictions, at least all major jurisdictions we can imagine. This simply means much quicker exits, individual exits for the investors. And that's, I mean, I could probably talk more about other perspectives and other benefits, but that's for me, from the investor perspective, that's probably the most important one.
We have to also discuss about the NFT market. What are the implications of this?
Okay, so that's quite interesting. Recently, I read an article about introducing NFTs to the property real estate market, which sounds like amazing when you think about it. But then, after obviously reading article until its end and thinking about it for a while, right now we can obviously consider NFTs as a very powerful marketing vehicle, not really something what is regulated and what can carry the same properties as let's say the regular items, underlying items, especially those on the real estate market. So you still need regulations. You still need like embracing this new technology advances by all sides of the story, meaning regulators, meaning brokers, and basically all participating parties. But still, like what NFTs currently provide, it's probably at least to kind of think about it as bringing in this positive flair and fresh wind is it's probably like a better access to certain information, quicker also, and new forms of exchangeable transactioning, how you buy, how you sell things. So if you can package certain items as the tokenized goods, and especially if we talk about luxury goods, those limited currently to very, very specific scope of people, buyers. This is just opening up this markets to a wider scope, wider numbers of participants, and that's, I think, the single most important aspect with NFTs and the tokenization generally is bringing in.
Jarek, thank you so much for being here with us at Unite Monaco.
Thank you very much. Thank you.